What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you, as always, I am the bearded boy wonder, Dave Bartosiak, and today, my friends, we've got an action-packed agenda, as usual. What does that mean? That means that we're going to do SBUX here, and then after SBUX, we're going to do Amazon. So what I got to do is try and stop talking at like 11:27, just so I could switch stuff over and get to the other one. So we're going to do that. It's been a while since I did double duty here, and we haven't done one since I've been kind of going this much in depth. So I'm going to try to get through it. Remember, I've got my live chat open. See, guys? You can see. Hey, what's up, guys? So I got the live chat open here on another window. But there's like a little bit of a delay. So when I talk today versus when you guys actually see it, it's like 30 seconds. All right? So sometimes I find myself talking to myself because there's a delay. And then I ask you guys, and then I have to wait, and then there it goes. So good news is I think the chat is live. So sometimes I type in questions there. So feel free to interact. All right, let's go ahead and get started here on SBUX, so that we'll have plenty of time to do everything we need to do. Oh, somebody bought the lotto ticket yesterday. That is good to hear. Lewis, I am happy to hear somebody bought the PayPal lotto ticket yesterday. Spectacular. A couple of those have worked out. Let's look at that real quick, just for giggles. Yeah, the PayPal lotto ticket sure worked out. This thing broke up above that range, right? That looked nice. Of course, our more conservative trade was selling the put spread out of the money, so that was fine. Good, so that worked. And then I was looking back at Chipotle, and we had the lotto here. I mean, obviously we're in the green here, and the lotto was like the 480, 490, I think, or 470. Yeah, 480, 490 call spread. So everything worked out. So good. I'm going to cover all of these and more during today's Good, the Bad, and the Ugly session, which probably won't go out until after the close. But again, that just goes out to the premium folks. So if you're not already signed up with us on Live Trader Premium, you know what to do. Shoot the email livetrader@zax.com. We will get you connected. All right, so stop putting the cart before the horse here, Dave. Let's take a look at SBUX. Before I start on SBUX, a little bit of I guess a backstory. SBUX, my parents bought me 100 shares of SBUX back in 1993, I think it was. And we're like, watch this. And my dad was like, follow this ticker, SBUX. And that's how this whole game started. So I got a little soft spot in my heart for SBUX. Smart move, Dad. Actually put me on this, but there you go. So black line corresponds to the right y-axis, which is the price. The little red arrows are earnings misses. Green arrows are earnings beats. Haven't missed since October 2015, so that's good. These multicolored lines represent the evolution of our Zach's consensus estimate over time. One thing that's jumping off the page for me right now is SBUX does a pretty good job managing these expectations. They've been around a long time. So part of this is that it kind of stays level, right? Ticks up a little bit, so that's good. The other part is this growth is always there, so that's good too. Solid, but recently a little bit of a downturn in the market, or not in the market, but a downturn in SBUX, right? So we got this. While we had this sort of negative move in the stock, this came on a series of earnings beats, but the EPS kind of finding its way down, right? So that's kind of a bummer. But here recently we do have sort of a rally in SBUX that hasn't really been met on the EPS side. So this is going to warrant some further investigation. So let's go ahead and do that right now on the detailed estimates page. So it is this X rank number 3 hold, value style score of D, growth of A, momentum of D. Interesting. They're going to report after the bell today. I know, we're cramming these in here. I know, I'm supposed to allow a full day, but I'll get back. I'll get it in gear. There's just so much to do, and I can't do these. I can only do one on Wednesday. I have a huge, my home run investor is, I do that every Wednesday, and that takes a lot of my time on Wednesdays. So it's hard for me to get around to this. Anyway, revenue numbers, 8.56% for the current quarter. That's decent growth. Next quarter's growth looks really nice, 10.6%. And this is on a company that's making, $5 billion a quarter. So that's huge when you think about it. Current year number, 7.66% on the revenue side. Next year looks like 9.5%. If we look at the EPS estimate, it's even better. So current quarter, 14.47. Next quarter looks like 9.86. Current year number, 11.06. Next year, 15.36. So lots of positive activity on the EPS end and lots of positive activity on the revenue side. Let's look at what the actual analysts, how many of these guys have come out and said, yes, increase our EPS. We got one guy, or I shouldn't say guy, right? Guy or girl, or just person, increasing over the last 30 days. One person's come out and dropped. I wouldn't say not downgraded. I want to clarify there's a difference between a downgrade and just dropping your EPS estimate. So just a little dip here in the EPS estimate for the current year and next year. Two people have done that over the last 30 days. So that's interesting to see. But what's the overall effect been on our exact consensus estimate? Not much of an impact. We've stated 45 cents here, stated 54 cents for next quarter. Current year number's gone from 213 to 212. I mean, that's nothing. 246 to 245 for next year. So not a lot of conviction to the downside. And again, we're talking about the surprises. Don't be surprised. They don't surprise too much. I doubt we're going to see a surprise here either, right? They do a pretty good job managing expectations. They're very well covered. As you see here, of course, a lot of the big firms cover them. So there's that. Let's dig in the charts a little bit. Pay no attention to the random feet that you're going to see in the ad section or whatever goofy. So I get the goofiest ads that pop up here. It's like, it's just goofy. So what's happening on the chart here for Starbucks? So I want to give it a little bit of perspective. Out here, November 2015, 63.10. Oh, here's 64 at the end of October. So basically 64s. That's a firm sort of multi-year high. You got some selling. Took shares down to 50.84. I'm going to crack up if this is a fib. Of course it is. Of course it is. These algos, boy, they really got it. They really got it covered. And that's it. Yeah, I don't have to add anything else here. Look at that. Bottoms out here at the 61.8% retracement of this move. Let me make this a little bit better. I'm sure, I could enter the exact values, but you see what I'm doing here. Dip here, cranks up, runs out of gas at the 23.6, comes back down a little bit, broke through that. So this is the good news, is this little recent pattern that we see in shares of Starbucks is quite bullish indeed. So you got this nice little trend line. You got sort of this triangle that was developing, and then look, it broke through the top end. A lot of people like to say, like, this is the breakout. That's not really the breakout. The breakout, when you start to get in something like this, is the move from the top. How about I draw that worse? Is the move from the top trend line. When it breaks this trend line, that's when the breakout's happening. If you wait for the top here, you're waiting too long. Okay? You're missing out if you wait for that. You missed out on, in Starbucks' case, what? This went from 56 and change all the way up to 60. So that's 5% that you miss out on. The reason why I say that is I saw the same thing on, I'm going to go a little off topic here, but on IWM, on the small caps, we had the same thing happening where you had this nice little triangle developing, and then it broke out through the top, and then people are being reluctant. They're saying, I want to wait till all-time high. Now we're at all-time high. Now suddenly they want to make a move. Anyway, I digress. But it's already popped through this to the upside, so that's a plus. But it is also starting to stall out a little bit here, right? But what are we looking at? Commodity channel index, that's a little overbought, oversold indicator I like to use. If it's over 100, it's overbought. So right now we're a little bit overbought on Starbucks, but I didn't need that indicator to tell me that. Just looking at the move here. The good news is there's no divergence between what the stock price is doing and what my money flow is doing. So that's good. If you start to see divergence between the two, so like money flow is going down while the stock's going up, get out of the way, right? But money flow is still positive, of course, so everything's okay. So right now, stalling a little bit at these highs. I don't think that's really where the trouble is. And even if I zoom in here or zoom out or whatever, using my horizontal histogram for volume, you could see how it sort of changes a little bit over time, where a lot of this volume is going out obviously in this range. Now that we've broken out a little bit, the real resistance was sort of the 61 level. So we're on the other side of that. So I think this market continues to probe higher. So from a technical perspective, the bulls are still winning here. They didn't win last night at all. Ugh, rough day. Rough day for Chicago sports yesterday. Cubbies lost to the Pirates too. All right, so there's that. Let's get back to the options chain now and see what's going on here for Starbucks. Put this to the side-by-side view. These guys are reporting after the bell today, so we can use the April 28th options chain in order to make a few of our calculations. I'm getting ahead of myself pulling up the calculator. Let's start. So stock is 61.69, so we'll use the 61.50. Go ahead and outline this 61.50, and we'll do our calculation based on that. 61.50 call is 142. 61.50 put is 104. So they're expecting about a $2.50, 246. I like to call it 250 to make my life easier. Divided by 61.50. So they're looking for 4%, almost on the dot. That's the move they're looking for. Yes, no love without Rondo. No love when Jimmy Butler doesn't score in the fourth quarter either. Oh, man, I'm going to get all fired up here. So they're expecting a 250 or 4% essentially on Starbucks. All right, so let's keep that in mind. Now, let's go back and bust out the heavy hardware. Oh, you're not supposed to see this page. This is just all the research reports that I can get from this. I can't show you guys any of that. I will be yelled at if I showed you a research report from somebody. But I can show you our consolidated surprise, which shows the market's reaction to Starbucks earnings. Last quarter, -4, even though they come in, right? So we already know that Starbucks comes in basically in line with estimates when it comes to EPS. But it's the revenues that you can't lie about, right? You can't juice the revenues. I don't want to say lie about, but you can't massage revenues like you can EPS. So the revenue miss last quarter, -4% was the move in Starbucks. Then you get -43 bips, 63 bips, a -5% move when they disappoint, 4% move even on a disappointment. So overall, last time we saw a really good move. Here's a 7% move in March of 2015. That was nice. And then June 2013, you get a 10% move. So it's been a while since Starbucks shares have actually moved. 5% in March 2016. It's been a while since we got a good move out of Starbucks. So let's see. So what do we want to do? First of all, let me just do the stack view here. And I'm just pricing this next day. I know you guys are going to want one trade for tomorrow that expires tomorrow because, I mean, whatever. I like talking about the trades that expire tomorrow anyway. But you're pretty much, when you do that, you're throwing all this options or this earnings analysis out the window. And part of using Zacks.com is being able to lean on that. But I just want to look at something here. I want to look, we said what, 250 essentially? So this puts this out past 64, right? Past 64 and under 59. So this is where the market's kind of looking. So when I look out this way, like if I want to sell premium, I look out here. So by doing something like this, you're essentially saying, the market's not going to move as much as the options market is pricing in, and I kind of want to just put the kibosh on this thing. So I like to just kind of look and say, 42. So you eyeball this, and you see there's a little bit of there's a trade there, right? The 64, 65, there's a bearish trade there. Yesterday, I asked you guys if you wanted some credit spreads or some debit spreads. Today, I'm going to do both, right? Whatever. I'm feeling generous today. So this is what I'm going to say. First of all, for the bears out there, the SBUX bears, I think you could probably even go a little further actually. Yeah, this is fine. Okay, SBUX bears. You could go short the $64 put, not 64, $64 put for 42 cents, simultaneously buying, or we're on calls. Let me start this over. Bears, you could sell to open the $64 strike call. This is April 28th for 42 cents. You could simultaneously sell the $65 call and get back 23 of those cents. So the net credit you would get being short the April 28th 64.65 call spread in this case is 19 cents. The amount of money you would have at risk is the difference in the strike prices, which is $1 minus the 19 cents net credit that you put in, or 81 cents. So you've got the potential to make 23% on this trade. What has to happen to make 23%? Shares of SBUX would have to close at or below $64 at expiration tomorrow, right? So very quick. So I'm going to type this up for you guys. The bear credit trade, I guess, is short the April 28th 64.65 call spread for a 19 cent net credit, okay? So that's the bear credit side. And then now I'm going to do the bull credit trade. And we're just going to do the same thing, going out, in this case, what the market is pricing in. So going out to 59 and doing virtually the same trade. So now, if you are bullish, sell the April 28th $59 put. You're going to get 31 cents. While simultaneously buying the $58 put, you're going to get back 18 cents. So in this case, your net credit is only 13 cents. So then the amount of money you're going to have at risk is the difference in the strike prices, which is $1, minus that 13 cents, which is 87 cents. So you can make about 15% on this trade. So this is the bull credit trade. It's going to be short the April 28th 59.58 put spread for a 13 cent net credit. Okay? All right. Now, let's go to the May expiration and see what we can't find here. So in this case, I want to go long a call spread. First, we're going to do the bulls. And the market was saying 64. So let's just go ahead and agree with the market. You know that oftentimes I like to do the halvesy trade, right? And what I mean by that is I'll look at what the market said it was going to do, or what the market sort of priced in was going to be the move, and then I'll just do half of it. Because oftentimes you'll see that the amount of money you could make on those trades, percentage-wise, is pretty much the same thing. And that's what I'm going to do. I'm going to show you the Dave Halvesy first, just so we can price this out a little bit. Long the 6150, it's going to cost 157. Simultaneously going short the 6250, we're going to get back 111. This is very interesting. So 46 cents would be the net debit here, or the amount of money you have at risk. Your potential upside is the difference in the strike prices, which is $1 minus that 46 cents. So you're talking 54 cents is what you can make. So you can make 54 cents on 46 cents, or 117%. Okay, keep the 117 in mind, because I want to show you something. If you went with the 6150 and said, yeah, you know, the market's right, we're going to go all the way to 64. Now let's look at what the actual risk versus reward is here. Same 157 is what the 6150 is going to call you, but now if you simultaneously short the $64 call, 58 cents is what you're going to get back. So in this case, it's 99 cents is your total outlay. Okay? Now the difference in the strike prices here is $2.50. So take the 250, subtract the 99, and you get 151. So you can make 151 on 99, or 152% rate of return. So 152 minus 117 is 35%. Okay? So now take a look at how this plays out. So you can go with the 6150 to the 62 and make 117%. And if you go out all the way to 64, you're going to get an additional 35% rate of return for it to move that much more, okay? That much further. So that's what you got to ask yourself. Is that worth it for you, okay? Now, what I can tell you is that the further out you go, the more, obviously, the more chance that you have. Kurt, you got me with the closer dry. The further out you go, the more of the chance you have for the post-earnings drift to take place, okay? More chance for the post-earnings drift to go ahead. So is that extra 35% worth it? In the case of Starbucks here, and we're looking at this chart again, 64s, that puts us up here at that multi-year high. Think about that in the context of what's been happening in the market overall. I'm going to say yes. So I'm going to say the bull debit trade. Look at bar chart reloading again. Thanks a lot, bar chart. Is the May 19th 6150 64 call spread. We're just going to call it $1. Just to make life easier moving forward, okay? Because 99, who's going to get filled at 99 cents anyway? All right, back to the 19th. Now let's put together the bearish side of the equation. So a put spread, and again, that I think would be able to go the distance here. So the 6150s, actually the 6150s, how far out is Starbucks moving while we're talking? How much is it moving while we're talking? No, it's still there. Okay, so 6150 is a little bit out of the money. That's okay. That's fine. 6150. We said 59. Yeah. Set the 59s. Well, that's fine. Let's price this one out. All right. So, if you're bearish on Starbucks, 149 is what you're going to get filled. This is the May 19th 61.50 put. Simultaneously selling the $59 strike for 59 cents. That's 90 cents. So in this case, you got the potential to make 160 on 90 cents or 170%. What would have to happen is shares of Starbucks would have to get all the way down to $59. So again, bear debit trade is the May 19th, 61.50, 59 put spread for 90 cent net debit. All right. And we're rocking and rolling. Okay. That's a lot of trades. It's already 125. So I'm going to cut to the chase here. Which one of these do I think is going to work out here on Starbucks with the way the market's been going, with what everything that's been happening? And I think they may be underpricing the risk a little bit, or underpricing the move in Starbucks. I got to be bullish on Starbucks just because I have to be bullish on almost everything right now. I just feel that there's a lot of momentum in this market. Things are pushing higher. And when you're talking about Starbucks and the move it's had recently, from a technical perspective, there's really no resistance right now. I think she can run a little bit. I think it can definitely run. So I'm leaning on the bullish side here on Starbucks. Lotto ticket time. I think the lotto ticket for Starbucks is the 64 call. That's the lotto. Well, lotto is April 28th, 64 call for 34 cents. Okay? All right, that's all I got right now. I'm going to have to switch everything on over and get ready for Amazon, so don't go anywhere, because the Amazon trade, I think, is going to be way cooler than the Starbucks trade. And I'm going to need to switch everything on over there. So I'm pretty sure everybody's got, in the email, you got the link for the Amazon trade. I can't go back and pull that up for you guys and throw this in here right now. Sorry. Too much stuff going on. But I'm going to go ahead and cut this off, get everything back situated, and I will be back very shortly, my friends, for Amazon. So thank you so much, and I'll see you guys in 3 minutes.